Hey, welcome back. Now that we went over the overall market environment, now we're able to identify which Fib setup we're going to use depending on those days. So the four main setups that we trade are the Fib layout breaks. If you want to recap on how we draw the fibs for the Fib layout breaks, you can check out the Fib tips number 3 add-on video. In regards for the ripple effect, you can check out the Fib tips number 6 add-on video. For the EMA cross and first bounce, the Fib tips number 1 add-on video. And for the 5-minute chart setup, this will be the advanced setup that I will be teaching in this course. So I am going to dedicate an entire video strictly teaching how to identify these setups and how to take them. All right, so the first setup that I'm going to speak about is the Fib layout break. This usually occurs during trending environments, and you would draw the fibs from the beginning of the move since that leg tends to break market structure. It can easily turn into a 5-minute chart setup. And again, like I just mentioned, we will be going over drawing the 5-minute chart setups and how to identify them. So just keep in mind that this information is going to come up next on the following videos. When it breaks our layout, move the 100% end of the fibs to the following leg and also move the 0% end. Only move the 100% end once and the 0 as many times as required. Now, let's see some examples. I have highlighted several examples here so it could be easier for me to go back in time to identify the setups, and we have one right here. So I would grab the fibs, draw them from the beginning of the move because this leg broke market structure to the upside, and I would place it right there since that was the first pivoting point. If you notice, we had several candles consolidating before breaking the Fib layout. Since it broke the Fib layout, now we're going to move the 0% end of the fibs to the next pivoting point. And we're also going to move the bottom since we just moved the 0%. Now we move the 100% up to that pivoting point. And if you wait patiently for these candles to develop, you had a beautiful entry right there going long. Let's look at the second example here. Grab the fibs, grab the leg that broke structure. We only had a 38 bounce short right here. So since it broke the market layout, since it broke the Fib layout, now we stretch them lower. And we also stretch the 100% lower. In this case, the market has so much strength to the downside, and also we had so much dynamic resistance at the 62 area from the 14 EMA and the 200 EMA that we missed the 62 entry by about 2 pips. However, this is a perfect example of a Fib layout break. Third example, right here. Let's grab the fibs, draw them from the leg that broke structure. So right here, we noticed that we had a quick pivoting point. However, this looks like it was a 23%. So now we move the bottom of the fibs to the next leg and also the top. And if you wait patiently, you see a perfect trade unfold right here. This is another good example of a Fib layout break. Another example. Grab the fibs, draw from the leg that broke market structure. Here, we eventually had a 38 bounce. Since we had a 38 bounce and it broke the Fib layout, now we draw from the following leg. And we have moved just the 0%, so now we also move the 100%. And here we get also another beautiful Fib entry short. We have another example here. Now we grab the fibs, draw from the leg that broke structure. Seems like we had a 38 bounce and then it broke the fib layout. So now we move the 0% to the highest point before the next pivoting mark. And we also move the 100% since we moved the 0%. Now be mindful from what we said here. Only move the 100% end once and the 0 end as many times as required. So the 100% end, we just moved it once, we're not going to move it again. However, the 0% broke the fib layout again. So now we move the 0% a little higher and we keep the 100% at the current leg. And if you just sit back and are patient, you see the trade pull back to our perfect entry for a long. Another example here. Grab the fibs. Broke market structure. Had a 38 bounce. Now if you move it higher on the 0% and also move the 1%, wait patiently for the next leg to retrace, and we had a perfect bounce to the long side. So these are examples in regards to the fib layout break. Just do some back testing, recap on how they are formed and how they develop. A lot of times they get a 23 or 38 bounce first before you start extending your fib layout. If you see a 50% bounce, then I would just consider that a legitimate trade that unfolded, and we just had too much dynamic support or resistance to touch the 62. So in that case, I would not be trailing the fib layout. So that example goes over the fib layout break and how it unfolds. So be mindful that most of the time you will see this setup occur during trending environment. So now let's go over the second setup, and it will be the ripple effect. This usually occurs during range environments or large volatility days. It will offer an immediate opportunity around 6 to 9 a.m. Eastern for a trade. So this means that the leg that breaks market structure would immediately will have a retracement to the 62 long, and it will play out. However, if you are patient, you can wait for the bounce from the bigger leg and capture a larger move, which means that once that fib setup plays out, if you're patient and let it reach highs, it would eventually retrace to a higher degree, and you'll be able to take the bigger leg or the macro leg that falls behind that micro leg that broke structure, and you're able to take a bigger 62 longer short for more pips. So now let's see some examples. I also wanted to show this example here from today. We saw another ripple effect setup. So I will go ahead and start explaining how the first one started to develop and then the second one. So draw your fibs. Very, very easy today. You have your EMA cross, the first bounce. And also that first bounce was the one that took away all those previous highs. So you draw your fibs, you wait for the flush, you wait for your long right here at the 70 entry. This trade here, I think like 50% of all my students took this trade today. So this was an awesome, awesome setup. It was over 50 pips. All right, so since you see the first setup unravel, EMA cross again, EMA cross, first bounce, same leg that broke market structure. All right, so now you see that the chart started to retrace. So as it retraces, now let's look at the bigger picture. Now let's look at the ripple effect that has been going on. So now you draw your fibs from all the way in the resistance area and drag the bottom down to the support area. And what did we see here? We saw a 38 bounce and right now a 62 bounce. And so far, it has pushed up just about 14 pips. So be mindful that this scenario usually happens on range environments. And if you see here, we see a bottom, bottom, resistance, resistance. So we're entering like a very wide range at the moment. And that's when you're mostly going to see the ripple effect setup. So again, let's go over it one more time. You see the market forming a market structure break, EMA cross, first bounce, wait for the chart to retrace, and keep stretching your fibs to fix them and align them properly right there, and wait for the retracement. You have to bounce that trade, you take the trade, you take profit, done. All right, so now since you know that this is a range environment, you know that this can potentially retrace back and then give you another 62 bounce with the bigger leg. So another bigger leg will give you a 62 bounce as well. We will most likely see resistance at the touch of the 14 EMA, which will be about 20 pips from our entry. And this most likely is going to just consolidate for the remainder of the day. So this is a very, very useful setup. It'll give you multiple entries during the day. But before you can anticipate the ripple effect pattern, you need to know in what market are you trading. And if we were just in a trending environment, first of all, you will not see a retracement this deep. This will actually hold around the 38 and continue to be bullish for the remainder of the day, or even the first 2 to 3 days of the week before hitting Wednesday and going the opposite direction. So this was a good example here, and I wanted to share it before I conclude the video on the ripple effect pattern and the examples on how they unfold. So now let's go over the ripple effect. It usually occurs during range environments or large volatility days. This means that this setup is not very common, or at least not as common as the EMA cross first bounce or the layout break. And the reason for that is because you want to be trading in a range environment, and most of the time the market is always trending, or for the past few years it has been trending. However, I have noticed that during first and second quarter of the year, you will see a lot of ripple effects. So that gives you a lot of opportunities to take trades back to back in the same day or during the same session. So it's good to know how the market reacts during different seasons and how you can adapt yourself to the market environment so you can take plenty of trades. So let's go over some examples. And a few days ago, I was able to spot some setups here, and I will go ahead and start drawing the fibs. They're not the best setups. However, it gives you the gist of the idea of how ripple effects work. And I have also created the video on the add-on going over them. So if you run your fibs on this small leg with an impulse, you wait for the retracement and you see a 62 long. But if you notice, that was just a small measured move and it was short-lived, and it would have just stopped you out before continue to go higher. So if you're patient and you wait for the proper confirmation, which is the entire leg instead of this small leg here, because this leg here, this is just a nano leg. So this is the nano leg, another nano leg, and this entire leg here is a micro leg. So this is why you want to be able to wait patiently for the correct confirmation from a legitimate leg. And then if you notice that this entire leg here, it broke market structure to the upside, and then you have a proper entry for a 62 long. And also here, this is a good example right here, how you have this impulse going up, and you can go ahead and once you see that impulse going up, this was around, I would say 5:30 in the morning. Once you see that impulse going up, you wait for the retracement and then you have a beautiful long here. However, it was short-lived. That was just a small measured move. If you wait for the correct confirmation, which is the entire leg breaking market structure the correct way, and you wait for that retracement, now here you have more confluence because now you're above the 5,800 institutional level, and you also have a market structure break to the upside. So you can take this long position here and you'll be able to capture a lot more pips. So that is the whole method of the ripple effect. I can go ahead and draw it out just to see if I can clarify it some more. So you have the first leg, the nano leg, and it turns into a micro leg. You wait for the retracement, and that would give you a short-term bounce, a short-term 62 bounce. But if you are patient, it will come back and then give you that correct bounce upon confirmation. So just keep in mind that you don't want to run your fibs with the nano legs because it will give you a 62 bounce. However, it will be short-lived. If you just wait for the correct market structure break, you will see a bigger impulse as a retracement, and then you'll see a larger push. And this goes for both ways, whether you're taking a long position or a short position. I also found another example on the 30-minute, and this is a great example because if you notice with this leg, it broke structure to the downside. It took out these lows. So if you run your fibs from here to the bottom, you have a rejection of the 79 entry short. However, it's very short-lived because it finds dynamic support from the 200. If you're patient and you draw your fibs from the bigger leg, now you have a better entry and you have a better measured move. So these are things that we have to consider. They're just two options. Whether you take the first bounce and you take profit and you will not be sitting in front of a computer for more than 1 or 2 hours, or if you have the time to be patient in front of your computer or set alerts, and then you're able to capture the bigger move. So it is all dependent on your schedule. I personally sometimes take the quicker move just because I'm able to just enjoy the rest of my day without having to be glued to my computer. I like being in front of my computer for 1, 2, or 3 hours tops per day and just enjoy the rest of my day. If you was to wait for this entire move to unfold, you'll be waiting for hours. So then it is all dependent whether what's more meaningful to you, whether your freedom of time or having more capital in your bank account. So that is a personal option that you guys have. I personally like to make less money and have more freedom, which is the reason why we are full-time traders. This is the whole sequence of this setup. It is not one of my favorite setups. However, it is one of the ones that get me out of my computer and out of my house at an earlier time so I can enjoy my life. So now let's go over the EMA cross and first bounce. I know this one is very, very, very common. A lot of people that have issues running the fibs or finding the leg to run the fibs from, I always recommend to start off with the EMA cross and first bounce. It is very, very easy to identify. So it usually occurs during trending environments or major pivotal points. It is a very, very, very common setup. You will see it throughout the entire year. However, if taken without looking at the higher time frames, you will only capture a 10 to 15 pip bounce. So if taken correctly, the market's objective is to cross the 200 EMA either after 1 or 2 attempts. Remember that if the market rejects the 200 EMA, it doesn't mean that it won't go after it one more time, because that's how human psychology is. We like to try things for 2 or 3 times before giving up. So now let's go over some examples of a EMA cross and first bounce. And there are several ways how they can form. They can either have the EMA cross and the first bounce penetrate the EMAs before creating the leg that pushes and breaks market structure, which in this case, it will be the leg right in front of the EMA cross. You have the EMA cross right here, and then the leg. And if you notice, broke market structure to the downside, you had the retracement, and you have your short entry right there. So in certain cases, you will see the EMA cross and the leg penetrate the EMAs, or you can see the EMA cross and the first leg under it if it's a short, or above it if it's a long, or you can also see the EMA cross and the first bounce right underneath the cross. So those are things that we need to keep our eye on. However, it is one of the easiest setups, since once you see the EMAs crossing, you can anticipate a leg that is going to be breaking market structure. Another example here is the EMA cross, and this is the first bounce right after the EMA cross. It did penetrate the EMAs, however, it is still valid. So if you draw your fibs from the first leg, start drawing it down and wait for that bounce. If you notice, after it created this low here, it retraced and it gave us a perfect 62 short, and that was a very nice entry. Another example here is the EMA cross to the downside. You had the first leg here. So since this is the first leg, draw your fibs going down. And if you notice, it had a beautiful entry short here. And then I try to retest that entry before coming back down and completing a measured move. Here's another example. EMA cross right here, and the first bounce was right ahead, which was the leg that broke market structure. So if you draw your fibs from EMA cross, first bounce, broke market structure, you had a beautiful 79 long at that point. Another example here. EMA cross, first bounce. So once you see the cross, anticipate the next bounce to break market structure, which was this leg right here. If you have patience, drag it down, and right there you see the 62 short. So those are pretty easy setups. Just wait for the EMA cross and the first bounce, which would be right at the cross or anticipated forming ahead in the next few minutes. So now let's go over the 5-minute chart setup. So it usually occurs during trending environments. You must master the 15-minute chart before looking at any faster time frames. Remember that this is a very advanced setup, and this is why I did not go over the 5-minute chart on the main Fibs Don't Lie course. I don't want to get anyone confused. The 5-minute chart can build up anticipation when you're in a trade, and build up your anxiety level if you have not mastered your ability to sit in front of a chart and wait for the actual setup to play out. You would draw your fibs following the same rules we use on the 15-minute, and you would also draw your fibs on the 15-minute. If you witness a rejection on the 38% on the 15-minute chart and is in sync with a 62 to 79% rejection on the 5-minute, there is your trade. So I'm going to go over some examples, and you guys are going to love it because this is one of my favorite setups, and it's very challenging, but it's lovely once you master it. So now let's go over some 5-minute chart setups. And if you notice on the left hand side here, we have the 5-minute chart. On the right hand side, we have the 15-minute chart. On the 15-minute chart, you will be drawing your fibs how you usually draw them, but you would be anticipating 38% bounces instead of our regular 62 to 79% bounce. And on the 5-minute, you will be anticipating a 62 to 79 bounce in sync. So if you see in this example here, we had the EMA cross, first bounce on the 15-minute. This same first bounce was the leg that broke market structure. We had a retracement here, we saw that the candle closed right at the 38%. So now you look over at your 5 minute, and on your 5 minute, you will do the same thing. You would draw your fibs from the leg that broke structure. If you notice this impulse here, took out all these previous highs. So that will be the bottom of your fibs to the highest point, which was right here. And then you wait for that retracement, and right where you see this candle close at the 38, you also saw this candle close here on the 62. So this is a good indication that this is most likely going to be a 5 minute chart setup. So if you notice here, you had the 62 started climbing, and after the 38 bounce, it also started climbing. Let's go over another sample, and it should be fairly similar. In this case, we had a big impulse going long on the 15 minute. It broke structure, it took out all these previous highs, and you saw the retracement rejection at the 38%. That's where the candle closed. So now you look over at the 5 minute chart, and you saw the big impulse as well, and you saw the retracement. And once you saw the 38 touch here, it was the same as a 62% touch on the 5 minute. This was a strong indication that it was a 5 minute chart setup. So it's fairly easy if you notice how you could just put two and two together. And what I personally do is I have under one chart, under one screen, I have two charts together, the 5 minute and the 15. This is the only thing that I do with the 5 minute chart. Other than big impulses and looking for those 38% rejections, I would not be interested on the 5 minute. I would not be doing anything else on the 5 minute chart. So now let's go over another example. And again, fairly similar. 15 minute chart, we had a big impulse to the downside. It took out all those previous lows. We saw the rejection at the 38 consecutively because we also had the 1600 institutional level. So since we continuously saw a rejection on the 38%, now you move down to the 5 minute and you draw your fibs from the big impulse. It broke market structure to the downside. Wait for the retracement, and it was a 36 short, while here being a 38 short. That was a beautiful one. And the last example, same thing. Let's start with the 15 minute. We had a big impulse going short on the 15 minute, had a quick rejection once that candle closed at the 38%. And if you notice here as well, we actually had two rejections at the 62. So it gave you two opportunities to go in short, and 62% rejection, 38% rejection. So this is the beauty of the 5 minute chart setup. It allows you to enter the trade at the very beginning, when if you were not looking at the 5 minute chart, you will completely miss the move because you will be looking at the 62. However, there is too much strength for the market to retrace that much. This is the beauty of it. I will still dedicate another video entirely to this setup, and maybe even do like a live video session how I actively trade a 5 minute chart setup, because I want to make sure that you guys master this setup. This is one of my favorite. You're able to capture very big moves once you spot it so early during the trend. All right, and now we make it to the end. And in all reality, there isn't a setup that is better than the next one. We have to be mindful that the market has its seasons, and we're always going to encounter different days, different scenarios, different kind of price action. And this is why you need to adapt your trading and your setup to suit the market in that current day. You will naturally be good at some of them and find other ones very challenging. So I want you to focus on your strength and ignore your weaknesses. Some people might tell you otherwise. This personally worked for me, and it has been working for most of the students that I have been doing the one-on-one sessions with already. And my key factor is to focus on your strength. If you're good at the EMA cross and first bounce, stick to that day in, day out, become very, very consistent, grow your account, and then slowly integrate other setups that you're very good at. I would say that the layout break is the most challenging, even for myself. So I dread a little bit whenever the market starts trending heavily and I have to use the layout break. Sometimes I anticipate the layout break turning into the 5 minute chart setup, which is more ideal because it's easier for you to spot the entry. But overall, there is not one setup that is better than the other one. So I personally like them all for very unique reasons. And after I conclude this video, I will go over the tide shift pattern, which is my all-time favorite. And this is why it's best to, even if you don't apply all four setups, it's good to master a handful of them, at least two or three of them, and ditch the one that you really do not understand. It just does not click at all, because these setups, you will use them in conjunction with the tide shift, which we will be applying that method on the 30-minute and 1 hour chart. This is when you're able to capture very large moves over 60 or 70 pips. And I'm pretty sure that everyone is going to love this setup. And I can't wait for the next video so you can witness that. Thanks for listening. If you have any questions, shoot me a DM or write to me in the community board.